I'm going to teach you a concept that I learned many years ago from some very smart people. How many of you want to come and have some pizza on us? Then your significant other comes over, slaps you in the head. Are you serious? Isn't this the United States of America? Yep. The greatest country on earth? 2 hands. Booyah! Booyah! We are in San Diego. I'm going to teach you a concept that I learned many years ago from some very smart people. And I'll get into my story, but I was an advisor, and even as an advisor of 16 years, they never taught me what I'm about to show you, which blew my mind because I thought, how is it that this concept, which has been around for 200 years, was not taught to a financial advisor after all those years? Doesn't make any sense. Folks, Social Security says that 5 out of 100 people are the only ones that are going to be financially secure. Isn't this the United States of America? Yep. The greatest country on earth? The land of opportunity? And that's the statistic? That means there's going to be a lot of 65, 75, and 85-year-olds working into their retirement. It's not because they want to. It's because they have to. How many of you like that? Wow, yeah, nobody likes that, right? Good. Because none of you are the 95%. All of you, because you are in this room, you are the 5%. Because you are willing to invest your time, your energy, your effort, and your money to learn something new. And that's what I'm going to do. In the time I have on this stage, I'm going to teach you some 5% stuff. That sound good, folks? Yeah. And now listen, I'm going to go quick, and we're not going to dive deep into numbers. We're going to get the concept out because I have something special. But with this here, with the 5%, that's a big problem that we need to solve. And we are going to solve it, but we have to change the way we think about money. Can you guys change the way you think about how money really works? Yes. I know you can, and that's what we're going to do. But before I get into that, let me just tell you a little bit about myself. I grew up in a lower working class family, like many of you. My dad was an alcoholic. My mom raised me, and it was a huge struggle for her. How many of you can relate? How many of you have ever had trouble financially or know somebody that's had trouble financially? Well, that was me. And even though that's not the norm, that's how I grew up. But I always wanted more. How many of you have ever wanted more? Say more! That's it. Well, I wanted more too, and I was willing to do what everybody else was unwilling to do. Shovel pigsty or pig pens. I was willing to go out there and work on farms. That's just what it took. And all of you did the same thing because you showed up here to Greg Reed's event. I came to the first Greg Reed's event in 2014. I was no one. I felt so out of place, and I remember sitting where you all are, thinking to myself, I don't belong here. These people are so great, I don't have anything that I can give any of them. But look at me now. Look at this. This is what you do, folks. You get the idea, you dream, and you go for that dream. You never, ever stop. It took a long time, 2014 till now, but that's how dreams manifest. And I want the same for every single one of you. Fast forward to the late 90s. I was an ambitious young lad. My mom taught me to dream. And I had 2 big goals. I wanted to be a pro snowboarder, and I went on to do that. And I also started a skateboard snowboard shop called Fat Man Board Shop. Started with a clothing line in my mom's basement. I remember starting that clothing line came because I was so badly treated by an employer that I came home and I said, Mom, I quit. That was the moment, 16 years old, where I quit trading hours for dollars. And I chased my dream, but I needed some money, so I started a clothing line, which then turned into a skateboard, snowboard shop called Fat Man Board Shops. It's still around today. I sold it, but it's still around. Talk about a legacy, right? We're going to talk about you all creating a legacy. You don't have to have a skateboard, snowboard shop. We're going to create that legacy. And not only that, while I was creating that, I was always drawn to money. How many of you have ever been drawn to money, but it's kind of a confusing, scary topic, right? Well, that's what it was for me. And then I watched the movie Wall Street, and I'm like, oh, Michael Douglas, there it is. That's the answer, right? No, but that got me thinking about money. And I dove in. I started studying. I started reading everything, and I got all those licenses to become an advisor. And when I got in the advisory world, I never forget this, folks. I'm sitting there watching all the advisors in the outside glass cubicles. These are the million-dollar producers. And I'm thinking, what do these guys do that I can't do? Well, they got there at 9. They went for 2-hour lunches, and they left at 4:30. So I said, if I want one of those, all I have to do is do more than what they're doing. Do what they're unwilling to do. So I showed up at 7. I worked through lunch. At the end of the day, I made phone calls, and I rose to being one of the top advisors at that firm. I managed tens, I don't even, probably hundreds of millions as a firm, and it was awesome. But then I had this weird moment happen. 2008, how many of you remember that time? Woo! Some of you are too young. I mean, literally, like you're all like, well, of course we all remember. Some of you don't remember that. Well, I do, because I remember right before that, I'd flipped a couple houses. I was making great money as an advisor, and I bought a strip mall, because why not? I was paying rent to one of my landlords, and I said, why pay rent when I can just buy this dilapidated paint store, convert it into a 3-unit strip mall, and then all good. So I borrowed $370,000 to buy the strip mall. And you guys all know I framed it up for you. 2008 hit. And it hit me like a Mack truck, and it brought me to my knees. I'll never forget, I'm like sitting down here and I'm like, I'm not gonna make it. There's no way I'm gonna make it to the next month. So what would you do? If you guys had one payment left in your bank account, what would you do? I'll tell you what I did. My girlfriend had just moved into my house. I came home one late night. I said, sweetie, I need your help. I need your help paying the mortgage. I need your help paying the utilities. And sweetie, I'm also gonna have my friend Pete rent that room down the hall. And my other friend Jessica, she's gonna rent the one upstairs. And I was stupid enough to actually think that I had a 50-50 shot of her sticking around. Yeah, my friends later told me, dude, you had like a 10% shot of her sticking around. How many of you think I had a 50-50 shot? Raise your hands. Are you serious? That's the faith you have in me? I'm gonna get off the stage. All right, let's see how many of you thought I had a 10% shot? Raise your hands. Well, I think she kind of liked me because she stuck with me and she's now my wife and we have a 21-month-old. So she liked me enough to stick around while I was failing and losing everything, and that's just how it went. We made it through that time, and then I remember we started doing what Warren Buffett said. Who can tell me the 3 rules that Warren Buffett says? Buy low, sell high, and what happens if you do that? Don't lose money. What was low in 2008? Real estate. Well, you're right, everything. But I bought real estate. Pennies on the dollar, and I bought them all the way up to 2014. I got up to 36 units. I was doing pretty good for a guy that just lost it all. And then all of a sudden in 2014, I'd made the same mistakes over and over, and that meant we were now living paycheck to paycheck, and I had to sell all 36 units. 2014, it's one of those days where you just spiral out of control. And that was me. Down to the bottom. It landed me in Thailand for a month because I had to clear my head. Larissa left, and I had nothing again. Sold all those units, sold our dream house, sold the bedroom set. That's how bad it got. And I'll never forget, I'm sitting there wallowing in my misery, wondering how could this happen again? And then all of a sudden in the mail comes a postcard. Get that postcard, you've all had these. Come to this 3-day seminar to learn how to flip houses. Ooh. No, you guys aren't crazy enough to think I was excited about this, right? I flipped it over and I looked and it said, come to this 3-day seminar and we will give you a free iPod Shuffle. Oh yeah, iPod Shuffle, so I had nothing to lose. Off I went, and I remember sitting there and I saw 2 guys get on that stage, Greg and Mike. And they start talking about this banking thing. And I'm like, ooh, interesting, money. And they start talking about it and I'm thinking, wait a second, this is the complete opposite of every single thing I'd ever learned as a financial advisor. So I questioned everything. And I went down the rabbit hole. And I started learning how this concept worked and how it changed my life. And ever since then, nothing's ever been the same. We had a show on HGTV, flipping houses. We went on to just do tons of things, do great financially. But that's not why I'm up here. I'm up here to tell you what that one thing was. Can you all do one thing? You can, right? Can you change just one thing? Because that's all I did. I changed one thing, and it changed everything. I changed where my money went first. So let me gauge this room. Can anyone tell me what is the definition of money? Just blurt it out and we'll give you a book. What's the definition of money? Means of exchange. Who said means of exchange? Right over here, Debbie. Give her a book. Money is nothing more than a means of exchange. Money for food, food for money. Money for car, car for money. Money for house, house for money. Simple, right? Okay, next question I have for you. If money is nothing more than a means of exchange, then what company in the world uses compound interest? Banks? Banks? Anyone else got something different? Insurance companies, what else? No one else? Everybody's got their head down in their phone? We're going to do some push-ups later, because in a second, we're going to have some people doing some push-ups that get up. No, I'm just kidding. But yeah, so everybody says banks. Now let me ask you this, and I got 20 bucks here. Who wants 20 bucks? Okay, you're going to be my banker, okay? I want you to hang on to this $20. This is my banker, everybody. Look over here. So I just gave my banker $20. Now, what is she going to do? Is she going to take that money and put it in a little box in the back with my name on it?
No, hell no.
Absolutely not. What is the bank going to do? It's going to loan that money out. It's going to move that money. That money is not going to sit idle. The bank is going to move my money. Enjoy it. I'll come back with interest for that. Banks do not use compound interest. They charge you compound interest. They pay you compound interest. They don't use compound interest. We are the only ones who have been taught to park our money, leave it sit, and use this thing called compound interest. Dealerships move cars. Grocery stores move groceries. They don't leave money sit. And when money sits, it gets weaker and weaker and weaker. And we're going to go into that in a little bit. How about taxes? Taxes go up or do they go down? Up. Where's inflation right now? Can anyone just tell me? Where is it? No, what is inflation? 7.9%. Does everybody understand that inflation is a hidden tax? So our taxes are going up. So if our money's sitting there, the taxes aren't slowing down and our money's going nowhere. Okay? How about retirement accounts? How many of you have a 401k or an IRA? You guys, really? No one has those in here? That must be an East Coast thing. I think some of you guys are just not telling me. 401ks. What do you do when you put money into a 401k? You give up control of your money. You put it in a 401k where it's going to sit for 5, 10, 15, 20 years, right? And then what do? You take it out. And unless it's a Roth, don't you pay tax on that money? Did you not all just agree that the taxes are going to go up? So you're going to put the money in there, leave it sit for 5, 10, 15 years, then you're going to take it out. They're weaker dollars because of inflation. Not only that, you're going to take it out at a higher tax rate. Tell me who wins on that equation? Is it you? Did you not see Social Security's numbers? They win, not you. We have been taught our entire life to do things with money that we would never ever do with things that money buys. Would you guys ever buy a loaf of bread? Take that loaf of bread home, put it in the freezer, shut the freezer door, and then wait 5, 10, 15 years. Come back to that same freezer, open the door, take out that loaf of bread and say, No, you wouldn't eat it. Be freezer burned. Would you ever buy your dream car? Who in here just bought their dream car this year? There's got to be some Lambos and Ferraris. There we go. What'd you buy? Jeep Wrangler. Awesome. That is a badass vehicle right there.
67 Continental.
67 Continental. They bought their Jeep Wrangler and their Continental. Now let me ask you, when you bought that car, did you get the keys and did you walk into that car, get in it, and get ready to turn this? Oh, hold on a second. Catch yourself. I can't drive this car. I got to wait 5, 10, or 15 years to drive this car. I got to treat this vehicle the same way I treat my money. Did you do that? I saw this guy gassing that thing up. That was probably $500 to fill that Continental up. Would you buy your dream house? And then you get to the front door right after you closed with the keys and your significant other or your spouse. And just when you're out ready to go into your brand new house, you say, oh shit, honey, we can't go in. We have to wait 5, 10, or 15 years before we can move into that house. I know this seems stupid, right? But this is what we have been taught to do with our money. And we just think it's okay. And it's not. It's why there's a problem, and it's why you have to change some things you do with money. And that's where we're going to go next. So now that you guys all got that, let me get my screen back. I got some slides here, which, anyway, who cares? We're going to get right into it once we get there we go. How many of you have ever used the credit card with the intent of paying the credit card off? Raise your hands. I do this all the time, right? You take the credit card, you swipe it, and then you intend on paying it back. Now, honestly, how many of you pay it off every single month? A lot more than I thought. See, I used to play this game with my wife. We used to flip 20-some houses a month. And we would go and we would basically use our credit card with the intent of paying it off to get the airline miles, the mobile gas cards, and everything else. Sound familiar? But then sometimes it just wouldn't get paid off. You guys can relate, right? Not always easy to pay those cards off. So it'd build up, and I'd look at the statement and I'd be like, all right, drywall, screws, Versace boots. Versace boots, all right, maybe they make work boots now, pass. Gucci tool belt. Honey, can you come here for a second? Gucci tool belt? Yeah, I needed a new tool belt. I'm just messing with you, but that's what happens. We have the intent to pay it off, but we don't always get around to it. And then we pay interest to the credit cards. So let's do a little example, right? Look at the screens. Average family in this country has $30,000 in debt, okay? Give or take, that's what they have. Is it fair enough to say that credit cards charge 15%? 15% good? 15%. So $30,000 at 15% is $4,500 every year, 375 bucks. You're giving that money away to them, and it's leaving your family forever. But that's okay, we're gonna pay it off. But what if you owned your own bank? Wouldn't that be different? If you guys owned your own bank, wouldn't it be easier to pay those credit cards off? You would just go to your bank and you would take a loan from your bank, and then what you would do with that loan is you would charge yourself interest the same way the bank charges you interest. Let's call it 5%. And at 5%, that's $1,500, right? $4,500 is what you were giving the credit cards, but now you have your own bank. I'm just joking here, but if you had your own bank and you took a loan from your bank and you paid your bank back at 5%, $4,500 minus 15 is $3,000, right? So you save $3,000. Everybody with me? Yeah. But hold on a second. If you owned your own bank, who would the interest be paid to? Would it be paid to a credit card? You, right? You'd keep that. So you don't save $3,000, you actually keep $6,000. Now that sounds too good to be true, right? You can't own a bank. No, but you can do exactly what a bank does. Who in here is a business owner? Raise your hands. Okay, keep them up. Everybody look around that's not a business owner, look around. Anyone own a restaurant? We got any restaurant owners? One in the back. Ma'am, in the back. When you want to take your family out to eat, do you take your family out to your restaurant or do you take them to somebody else's? Both? But you normally would take, like if it was me, you wanted to take out to dinner, you would show me your restaurant, wouldn't you? Yeah, she owns the restaurant. She's going to visit her restaurant, support her restaurant. Okay? How about a gym? Who here works out? I know there's a bunch of you guys out here work out, and the women too. If you owned your own gym, would you work out at your competitor's gym? Sit there doing bench press and the people see you and like, don't you own the place across the street? Yeah, man, I'm just trying this place out. No, you'd frequent your gym. So if you owned your own hair salon, where would you get your hair cut? Your salon, right? Andrew, where are you? Can everybody look over here at Andrew? This is what happens when you go to the competitors. Yes. Woo, thanks, Andrew. You would frequent your own salon. He knew that was coming. So if you owned your own bank, would you make deposits in your bank? You would, right? If you owned your own bank, but you needed a car or you wanted to buy something, would you take a loan from your bank? You would, right? And when you took that loan from your bank, would you pay your bank back with interest the same way you pay their bank back? Of course you would. You wouldn't steal from your bank. So everything I'm going to teach you today about how you can be your own bank is related around that exact concept. Everybody understands that? You have to think like a bank. You have to do what you do now with other people's banks with your own bank. It is that simple. And I know some of you are thinking now, it's not, I don't have the money to open a bank. No, it's how your money moves. That's what we need to change. Because what I'm going to show you is something that the Rockefellers, the Rothschilds, the Ray Krocs, the Walt Disneys, the Doris Christophers, the Joe Bidens, and soon many of you, actually many of you in here already, are doing. And that doing is going to be to change one thing. And that one thing you are going to change is where your money goes first. That's it. You're just going to change one thing. How many of you can change one thing, where your money goes? That's it? Nobody else wants to change one thing, where their money goes? Wow, all right. We're going to change one thing, and that's where your money goes first. And by doing that, you're going to do the exact same thing all those names I just mentioned do, and how they started and grew their businesses so that you can grow your business. So in doing that, it's called the money multiplier method. It's a very simple concept. The money multiplier method includes three things. A machine. The only thing the machine is there to do is to move your money through it. Can everybody understand that? You put your money in, and then your money goes to work for you. That's it. It's all the machine's there to do. Number two, you're going to understand that building wealth is not a sprint. I see this all the time. People are sprinting to wealth. I used to do this. Take the highest risk thing because it's going to get me wealthy. I'm going to make the most. Every single time I did that, when I sprinted to wealth and violated the laws of wealth, I lost my money. Wealth takes time. It's a marathon. So I'm telling you, you're going to have to wait to build true wealth. Because who in here can tell me I'll give you 20 bucks. Who can tell me the difference between being rich and who can be wealthy? What is it?
Rich is, you have a lot of like you have generational wealth that keeps coming in like a constant revenue.
That's rich, right? So you have money coming in. Say it one more time.
You have money coming in and like you'll probably just go spend it or something. But being wealthy is like a generational thing, and you'll have a bunch coming in. And being wealthy, you're gonna always have money coming in no matter what you do.
Holy crap! 20 bucks. Who's got my wallet? Can you give this kid more than $20? He nailed it. Did everybody hear what he just said? Rich is when you think you have money, when you dress like you have money, when you drive the fancy things, but then your money's gone. Wealth is when you have money that doesn't leave your family. When your money works for you, when your money is continuously working every single day for you, instead of you having to work for money. That's brilliant. I can't believe he got that. That's like, I never would have expected that. Seriously, man, I'm gonna hook you up. I'm gonna give him some money. Put your hands together for that answer. I can't even believe he nailed it, but he did. That is the difference between being rich and wealthy. Wealthy know how to keep their money. The rich just know how to look like they have money. Now you can take that for whatever it is, but that is it. Number 3, you have to know where you're going. How can you get anywhere in your car if you don't put the destination in? You can't. Your GPS doesn't know where you're gonna go if you don't tell it. Well, your life and the universe won't take you where you have to go unless you have a destination. So you need a goal. The money multiplier is these 3 things. That is it. And the very first thing we're going to talk about is the machine. Again, what is the machine going to do? It's just going to be what? There to move your money through the machine, right? Everybody got that. We're going to put it in, and we're going to send it out to work for us. That machine that we're going to talk about is nothing other than a dividend-paying whole life insurance policy from a mutually owned company. Now, at this point, when I do this talk, someone always wants to go to the bathroom. For good reasons, right? You've always heard whole life, oh my God. Same way I did. When I met Mike and them, I'm like, dude, I'm an advisor. Whole life, really? Because you're probably thinking to yourself, man, Chris, what the heck does whole life have to do with me building my wealth, right? Who's thinking that? You can be honest, because I did. I'll tell you what it has to do. It has everything to do with your wealth. It has to do everything with your wealth, because this is what the wealthy do. This is what the rich do. This is what the banks do. Matter of fact, banks are the #1 purchasers of whole life insurance in the world. Google it. Write this down. BOLI. BOLI. Bank-owned life insurance. I want you to Google that. Hundreds of pages will come up showing you how much money banks have in whole life. And I'm going to show you in a second. They have, right there, $75 billion. That's only the top 5. FDIC.gov. Whether you trust that one or not, I'm laughing, but you know, whether you trust that one or not, that's how much money they have in whole life. They have more whole life than they do all the land and buildings combined. So you have to make a decision. Are the banks stupid, or do they know something we don't know? I like to think they know something we don't know. So we're all car people in here, or one or the, you all have a car. So when you want to buy a new car, you walk into a dealership. A Ford dealership. I want you to wrap your head around this. You walk into a dealership, and right there on the floor is a brand new blue Ford Focus. And you're looking at it, you run your hands down it. I won't touch your leg, I promise. You're going around it, and you're just like, oh, look at that Ford Focus. Whew. Sexy car, right? Man. Then your significant other comes over, slaps you in the head, and honey, get over here and look at this Raptor. Ford Focus isn't a sexy car, but you're home and you're watching YouTube, and all of a sudden you see this guy, come on, named Ken Block. And he's sitting in a Ford Focus going 130 miles an hour sideways around a turn in full control. Are those two the exact same cars? Absolutely. They are both a Ford Focus, but what makes Ken Block's car go around a turn at 130 in full control? Design and engineering. If you seriously think that the banks are buying the same whole life you are from your broke-ass brother-in-law or the insurance store down the street, you're kidding. They're not. They are designing and engineering these vehicles, these machines, to do exactly what they want it to do. And banks are in the business of banking. So everybody understands that what I'm going to show you, this isn't the whole life that you know. This is completely different. This involves your advisor or the person setting it up like us to take a 90% cut in our commission so that you can have 90% more money. How many of you want to go to your advisor now and say, hey man, I want you to take a 90% cut in your pay? What are they going to say to you? Anyone? Yeah, see ya. No, we can't do that. And they're right though, they can't. But if you want to do what I'm going to show you, that's what you have to do. All right, let's dive into this thing. So with this whole life, it's going to be designed and engineered completely different than any whole life that you've ever seen. Can I get this back here real quick? There we go. But in order to do this, we have to understand how a bank works. All of you take your money and you give it to a bank, right? And what do they pay you? 4%? Anyone got a bank paying them 4%?
Hell no.
Now, what, 1? 0? Well, let's just pretend it's 4. So what do? They move that money, they lend it out. They do mortgages. That asset to you, that deposit, is a liability to the bank. They move the money out. And they continue to do this. I'll just put them all up on here. They lend it to you for cars. They lend it to you for home remodels. They lend it to you for debt consolidation loans. Each time they do this, they pay you an interest rate and they charge a higher interest rate. They make a spread. So if we were to go through this whole thing here, and I was to look at the spread on all of them and throw them up there, it's 20%. On each one of those, the bank makes 20% more than you do on a spread. That's it. So can all of you understand a spread? Somebody pays you one thing and they make another. That's all a spread is. The bank makes 500% more than you do on the deposit you leave there. That isn't right. But you can change that dynamic by changing one thing, and that one thing is what is going to save you from inflation as well. How many of you think inflation is a problem? We already hit this, right? It's a big problem, 7.9%. How do you beat inflation? Can anyone tell me? What's the way you beat inflation? Take on more risk, okay? Risky assets. Number 2, you can bury your head in the sand, can you? Bury your head in the sand and just pretend it goes by. Number 3, you could mimic what the banks and the wealthy do. Money in motion always beats inflation. If your money's constantly moving, constantly out there earning money for you, you can't lose. And I'll prove it to you. Here's the numbers. They're really small. We're not going to go into it. But this is somebody we're going to call Johnny Appleseed. This is a real client. Johnny Appleseed starts with 3 apples and gives you 2 of those apples. How many apples does Johnny have? He started with 3, gave 2 away. He's got 1 left, right? What if I told you Johnny still had all 3 apples, even though he gave 2 away? So let me show you what that looks like. This is Johnny's plan. This is nothing more than a specially designed and engineered whole life. He puts 50 grand in. He had 50 grand sitting in his bank account. Dumps that into this policy that is designed to do what I'm going to show you. Then he puts 491 bucks, and it's on the screens, folks. If you come to the Dough Show, the free pizza over here, we're going to go deeper into this so you can really see it. But the second year, so he puts 55 grand in. And then one of you needs some money. Anyone need any money in here? Anyone? You need some money? How much you want? 50 grand?
Yeah.
51 grand? Okay. He's going to take 51 grand. How much you willing to pay me? 12%?
Yeah, I'll do 12.
12%. He's going to pay me 12%. So I put 55 in, I take 51 out, and I give it to Glenn at 12%. Okay. So now that money's working for me. I'm making money twice. I'm making a spread, what my policy's paying me, which right now is between 5 and 6%, and what they charge me to take the loan. Now, when I take the money out, it's not my money I'm taking. All $55,000 is still in the policy, earning 6%. The 51 I gave him is my death benefit being loaned to me in advance. That's how this works, folks. It's that simple. They charge me interest on that, and I make a spread. Now, each year that spread goes up because of something that Albert Einstein talked about called uninterrupted compound interest. You guys know what that is, right? Those that understand it do what? Earn it. Those that don't, pay it. That's Albert Einstein. Year number 2, he puts $58.95 in the second year. That second year, he can take out $7,141. He didn't work any harder. He didn't take on any more risk, and he didn't do any overtime. His money was working for him, and that's not including the 12 Glenn's paying him. That's just going into another account. And every year that goes on. That's a 21% cash-on-cash return. Every year this goes on, it gets to be more. 26, 54, 115. How many of you would love to have your money sitting in a place where it earns uninterrupted compound interest, but then anytime you want the money, you have the ability to go in, take that money out, and send it out to work making more interest. You guys would like that, right? That's what this does. It's exactly how it works. Let me just show you how I do it with mine. All right, so I put 25,000 bucks in my specially designed whole life. So we take 23 out and we pay off KeyBank. KeyBank was charging me 9% on my money. Okay, 9%. That means I was paying KeyBank $289 a month, 289 bucks. I'm gonna then send that $289 back to my bank instead of KeyBank. Everybody sees what happens, right? Started with where my money went first. I put 25 in, I took 23 out, I paid off KeyBank. I used to give KeyBank $289 a month. Now that I paid KeyBank off, I'm gonna be an honest banker. And I'm gonna take the money I used to give to KeyBank, $289, and I'm gonna put that money back into my bank. Who can tell me what my bank is? It's a specially designed and engineered whole life. In doing this, I make a spread between what the insurance company pays me and what they charge me, and then I make 9%, what I used to give to KeyBank. Did I have to work any harder for that? No. Now what if I want to lend money, private lending, in a first secured position? Do the same thing. I put money in, I take that money out, I lend it out to Glenn at 12% through the private money club, then I take that 12% interest and I just send it back to my bank. Folks, everything that I'm talking about here, contrary to the noise, that's all you're doing. You're drawing a circle. Your money starts on one side of the circle where it earns uninterrupted compound interest. You then send that money to work, paying off debt, lending it out, investing in crypto, investing in metaverse. Whatever you invest in, that money goes to work there. Whatever that activity is that you do, you take the earnings from that, you finish the circle, and that money ends up back in your bank. Make sure you check out all my other videos by subscribing to this channel, click the like, and hit that little alerts button so you're notified every single time we do a new video. See you on the next one.